Hello, good afternoon. You're watching Market Fatafat on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza. Cheryl, a very good afternoon to you. Markets seem a bit muted as of now. After the gains we saw coming in, nothing exciting as of now in the market.
Absolutely nothing exciting coming in for the markets, Vinny. But yes, we had actually given up sharply from those days high levels. Now we are trying to recover those losses that we've posted. As you can see it on your screen, the benchmark indices are trying to actually break into the positive territory. As of now, when it comes to the Sensex, the Nifty, even Nifty Bank, that one also was moving in tandem with the benchmark indices, now making a recovery. If you look at the broader markets, for the most part of the trading session, they have been holding on to the positive territory. Your mid cap as well as the small cap index, if you look at the charts there you go, outperforming the benchmark indices once again, and also moving in tandem with the benchmark indices, recovering from the day's lowest point. Talking about the advanced decline ratio, heartening to know that it's still in favor of the gainers. So yes, hopefully in the next 2 hours of trading session, we are able to break into the positive territory and in the positive territory. Talking about the list of gainers then, you have SBI Life, HDFC Life among the top gainers on the Nifty at this point in time. You have Kotak Mahindra Bank, Titan as well as Asian Paints that are adding to that list. While on the losing end of the market, you have Sun Pharma, that is among the top loser on the Nifty. No doubt it has recovered some of the lost ground. You have ONGC, M&M, Aisha as well as LTI Mindtree among the top losers at this point in time. If you look at the sectoral indices, Vinny, safe to say that the defensives are taking it easy in today's trading session. It's the pharma index that's taking it easy, as well as the IT index, while on the flip side you have the realty as well as the PSU bank index that are holding on to good gains.
Okay, that's how the market setup is looking like. But on that note, let's get started with all those individual stock movers and trade either on the back of technicals or on the back of news flow as well. And on the technicals today, we have Foram M.Chheda joining in with us, while from the research team we have Amakshi as well as Shesha joining in with us. A very good afternoon to all of y'all. And let me start with the first stock that is in focus, and that is Yatharth Hospital. This was in focus because we have a note that has come in from Ambit. They are initiating coverage on Yatharth Hospital. They've given a buy rating for this, target price of 540 rupees per share. As of now, we're seeing the stock that has given up most of its gains that I was saying early morning, down 0.4%. But the main reason what Ambit is highlighting, they believe in the affordable care positioning of the hospital, and the cluster-based approach has set the hospital apart from its larger peers. The yield industry high margins, as well as the ROCE is also quite high as well. Other than that, the low bed density in its home market, relatively new hospital still in the ramp-up mode, and brownfield only expansion should allow it to scale up without hurting the profitability and the return on capital for the company as well. So they forecasted a 24% CAGR growth in the top line over FY23 to FY26, and a CAGR growth of 26% on the EBITDA front from FY23 to FY26, driven by mainly the occupancy pickup that they're expecting, as well as the case mix improvement as well. So yes, that's how they are looking at Yatharth Hospital in terms of that. They believe the valuation trajectory could reflect this resilience once the execution comfort emerges over next year. That is why a buy rating is what they're initiating the coverage with.
Alright, talking about Vesuvius India, a stock that we rarely talk about, but if you look at the stock, it's actually buzzing in trade on back of good set of numbers coming in. If you see the stock, 6% uptick coming in for that particular counter. If you look at the earnings, then in the quarter gone by, the income from operations actually rose by about 17%, coming in at around 413 crore rupees, while the PAT saw an uptick of as much as 67%, coming in at 60.3 crores versus 36.1 crore rupees. If you look at EBITDA performance, strong EBITDA performance as well. If you look at the EBITDA, it's coming at around 82.1 crore versus 50 crore rupees, while the margins also seeing a sharp uptick, 19.9% versus 14.2% on a year-on-year basis. And that's one of the reasons why, as you can see it on your screen, Vesuvius is actually logging those gains in excess of about 6% as we speak.
Okay, let's move on and talk about the first stock on the technicals, and that is NBCC. Forum today, NBCC is down and out in trade, but when you look at it in terms of the last 6 months performance, yes, 64% return in the last 6 months. What are you understanding in terms of technicals here?
Hi, good afternoon, and thank you for having me. We're talking about this stock. First is that the stock actually had formed a base closer to around 38 levels in the month of June this year. And later on, after it broke off from that base or the consolidation, the stock clearly was in an up move. Initially, this up move continued and the stock rallied to 63 levels, which is nearly 65% of the gain. Subsequently, the stock consolidated for nearly a month, and before it took off 63 levels as on 12th of October of this month. So this breakout also has triggered a good upside momentum of nearly 17% and top near 74 levels. Now last week, along with all the other stocks, we have seen that the stock also corrected by nearly 13%. However, there has been a rebound. When it corrected nearly 13%, it was retesting its breakout level technically, and we've seen a good rebound. So overall, since the stock is down today, it does give a chance to buy the stock at current levels, or even one can look at buying at a lower level at 65. Can maintain a stop loss below the levels of 62 and has some potential target of closer to 75 levels.
All right, that is NBCC for you. But Vamakshi, coming to you, Spandana, Sphoorty, a stock and a sector that you track very closely. How are the earnings?
Well, a good set of numbers actually came through from Spandana Sphoorty. When we talk about the AUM, that saw an uptick of almost 69% on a year-on-year basis. Now, the management has also guided that the AUM for FY24 could end at almost 12,000 odd crores. So again, a good uptick is what they're expecting. The net interest margin, that is the NIM, actually came in flat on a sequential basis, standing at 14.1%. It is the net interest income that actually saw an uptick of almost 72.4%. And largely, when we look at the net profit, that has actually gone up by almost 2.3 times on a year-on-year basis. But the negative factor that was impacting Spandana Sphoorty in the second quarter was the sharp uptick that they've seen as far as the credit costs are concerned. They've spiked from 30 odd crores to 90 crores on a sequential basis. Now, out of this 90 odd crores, 60 crores is towards the impairment pertaining to pre-April 21 book and SR. They also witnessed a sharp increase in other OPEX, which was explained by aggressive 200 new branches that they added in the second quarter, which is the highest that they've added in the last 5 quarters. But despite that, we did see ROA sustain over 5% for the third consecutive quarter, and ROE was also at 15%. So on the back of its numbers, we do have Spandana Sphoorty in focus today.
Shesha, let's talk about DCX Systems. Why is this one in focus?
Well, yes, this is also in focus on the back of its results and very strong set of numbers that the company has reported both on a year-on-year and on a sequential basis. The stock is off from the highest point of the day, but despite that, holding on with gains of over 8% as we speak. Consolidated revenue from operations came in at 309 crores, up 68% on a year-on-year basis. Margins have also expanded marginally at 6% versus 5.7%, so up 30 basis points on a year-on-year basis. And the company has also gone ahead and approved capacity expansion. They said that they've approved capacity expansion at company's sugar plant in Uttar Pradesh by increasing their cane crushing capacity from 7,300 TCD. They've increased it by about 2,100 TCD. So now their cane crushing capacity at this particular plant stands at 9,400 TCD. They said that this will require about 189 crores of investment, and it will be funded via a mix of internal accruals and debt. So on the back of both their results as well as capacity expansion plans that have come in, the stock is gaining in trade today, as I mentioned, off the highest point of the day, but despite that, up over 8%.
Right. Foram, coming to you then, Cholamandalam, how is this one looking on the charts?
This stock has had a very volatile move overall. Now, first talking about it, that from 2021 onwards till May this year, the stock was more in a down to almost a sideward range. And the turnaround happened this May, in this year, where the stock moved out from this long consolidation at around 646 levels. This long side consolidation has resulted in a very good upside momentum. Initially, the move was closer to around 952 levels in the month of June, which is closer to around 47% of the gains. And after stabilizing for nearly 3 months, it has resumed to move up higher. September was the month with a very stellar move, where the stock moved up to around 1250 levels, and it has witnessed a lot of profit booking at those levels, and hence we have seen a very long wick, and we've seen the stock correcting thereafter. But this correction has led to the stock price to move closer to around a 50-day moving average, which acts as a very good support levels technically. And we can see the stock price has rebounded from those levels of a 50-day moving average. Thus, one can look at buying the stock at around 1080 levels, and it has a potential up move closer to around 1320. And one can look at maintaining a stop loss below the levels of 1049.
Okay, surely keeping an eye out on those levels for Cholamandalam. But let's move on and talk about Marico. This one came out with its numbers yesterday, and when you look at it, the margin guidance of the company, that's the key highlight, that has been up for FY24. That was a bit of a surprise that we saw there. Other than that, overall the numbers were in line. There was nothing exciting on that front. Volume growth came in at 3%, mainly led by good growth in food as well as premium and personal care segment. Price cuts is something that impacted the revenue growth of the company as well, and that's something that's a concern coming in for most investors as well. And what they're watching out for is that how will the revenues move, because India business revenue had been a bit subdued. So that's a factor that is someone everyone is keeping a close eye on, and is not something that is everyone is too enthused by. Other than that, international business continued to see strong growth momentum during the quarter. Parachute registered a volume growth of 1%. Saffola Edible posted a volume growth of low single digit volume growth. And now the management, obviously, like I mentioned, has raised the margin guidance. Gross margin is expected to expand by around 350 to 400 basis point for FY24, and EBITDA margin a 200 basis point margin improvement for FY24 versus a previous target of 150 basis point expansion is what they were talking about in FY24. So keep an eye out on that. Jeffries, as of now, has maintained a buy and kept a target price at 60 rupees per share.
Alright, that's Marico for you. But Godfrey Phillips Forum, how is this one looking on the charts to you? Do you think that it'll make huge waves going ahead?
Well, certainly. In Godfrey Phillips, like 2,155 levels, which was a higher closing in July, was acting as a major resistance for the stock in the past couple of months. Until last week, the stock clearly remained above the resistance level. But uncertainty because of the geopolitical issues, or we've seen the overall market correcting, this triggered a fall in this stock as well, close to around 15%. But the good part here is that it has already recovered by nearly 14% from its lows. This price move has been backed by a good increased volume, which is supporting the bullishness. So it shows a lot of strength overall. Thus, one can wait to retrace to closer to around 2,190 to around 2,200 levels to accumulate the stock for a higher target of close to around 2,400.
Alright, moving on, let's talk about Siemens. In this particular counter actually fell to a 5-month low earlier on in the trade today. If you look at the stock of Siemens, it actually fell in excess of about 3%. Right now it's at 3.34. The stock is trading lowest since, like I said, 5-month low. What's the reports? What are the reports indicating, or rather source-based information from the wire agency, is the fact that Siemens Energy is mulling selling large part of 24% stake that it holds in Siemens India to Siemens AG, which is a parent of Siemens. The move is actually meant to shore up Siemens AG's balance sheet, and this deal could be announced as early as this week, is what actually reports have indicated. On back of that particular development, you can see Siemens on your screen is trading lower by about 3.4% as we speak.
Okay, let's move on and talk about CDSL then. And Foram CDSL seems like, over the last 3 months, surely has slowly, steadily kept moving up, and today also trading with gains of 5%. Now charts for CDSL indicating a further up move?
Yes, absolutely. But technically, it's given a breakout today. But let's talk about, since the earnings was the second quarter was already out and the volatility is already now settled in, one can just watch out for this stock. In September last year, the stock had peaked at around 1,450 levels, and since then had moved lower. After a turnaround in the overall markets in the March month this year, this stock has also bottomed out at around 887 levels, and since then we are seeing a gradual up move coming in the stock. Since now it has been more than a month that the stock is consolidating in this very narrow range, or I would say relatively decent range of 1270 to 1450 levels. And today we can see the stock is breaking out from this range. So this invites buying opportunities at current levels. And one can even maintain a stop loss below these levels of around, one can maintain the stop loss levels below the around 1370 and look for a higher target of closer to 1600 to around 1650.
Alright, moving on, Ashesha, let's talk about Blue Star, and this one also is an earnings candidate.
Well, absolutely. The stock is buzzing on the back of its results. Strong set of numbers that the company reported, and the stock is gaining nearly 3.5% as we speak. So consolidated revenues on a year-on-year basis saw an uptick of 20%. Margins have also expanded. Margins have come in at 6.5%. versus 5.4% that the company had reported same time last year. So 90 basis point margin expansion is what they've reported. Remember, we also spoke to the management earlier in the day where they said that demand has been strong for October. They are looking at a strong festive season. They are eyeing strong third quarter growth as far as numbers are concerned. Outlook for the next couple of quarters looks very strong, especially for the AC industry. And inquiry levels and order inflows have been very strong for their EMP business. So the numbers are strong. Management commentary is also quite solid, and the stock is holding up with gains of over 3.5%.
Okay, let's move on to the next one. And Anant Raj is the stock that you've picked out for us, Forum. This one is trading near those 52-week high levels as well. As of now, also, around those levels. What is the view coming in on Anant Raj now?
Well, in the past 1 year, Anant Raj has seen a very good consistent up move, and recently a higher top has been at 244.25 levels, and it's in fact today taking off those levels also. Before it could take off today, the stock price had tested a couple of times in the past few trading sessions, which was indicating that this was the resistance. And since it's taken off today, it does come under the buying opportunity. As far as volumes are concerned, along with the price move, we've seen a very good increase in volume. And along with that, before it could take off, there was a very good increase in volume during the consolidation phase, which indicated that there was some accumulation already happening in this stock. Thus, higher top, higher bottom formation, breakout from the resistance level, and increase in volume shows that the stock has a potential to move up higher. Thus, the stop loss can be maintained at the levels of around 235 and can look for a higher target of closer to 263 from a short-term trading perspective.
Okay, let's move on to the next one, and we'll talk about TVS Motors. This is in focus on the back of a brokerage note that we have from Jefferies. They've maintained a buy. They've hiked the target price to 2,000 rupees per share from a previous target price of 1,750 rupees per share. They believe, and what they're saying, a new high for the quarterly performance is what they saw coming in, which is why they're positive on the stock. Other than that, they're also highlighting that the India's two-wheelers segment is recovering. Exports are improving too, and improving margins, but the company is surely seeing high investments. That's a factor to watch out for. Other than that, we also have a note that is coming from CLSA where they're maintaining their sell rating, but they too have hiked the target price to 1,206 rupees per share from previous target price of 1,190 rupees per share. Margin improvement is what they are highlighting as well, and investment in subsidiaries is a key factor that they are keeping an eye out on in terms of something that could drain the cash flow. But yes, both of them have hiked the target price, so let's keep an eye out on that. Let's move on to the next stock then that is in focus, and Forum Supreme Petro. On other charts, what's the indication you're getting from this?
Well, in this stock, last month the stock was trading at around 450 levels. In a little more than a month, the stock touched the highs of around 618. That's nearly 37%. Last week, the stock corrected along with all the other stocks, and that was closer to around 50% retracement as per the Fibonacci retracements of the entire move from the levels of around 450 to around 680. And we've seen a rebound also coming in at around 535 to 540 levels, which was a 50% retracement levels. Thus, one can look at buying the stock around 25 to 30% at current levels, add in more at around 560 levels. Maintain a stop loss below the levels of 529 and look for a higher target of closer to around 650 to 660 levels.
Okay, let's move on. Now some more stocks in focus on the back of numbers. Actually, DLF, how are the numbers looking like for this one?
Well, it's a steady quarter is what DLF reported this time around. When we look at the pre-sales, that came in above what the street was actually anticipating. In fact, that was mainly driven by sales that came in from Camellias, which witnessed strong order bookings of almost 720 odd crores. Revenue was below estimates, and that was mainly on account of lower than expected completions, while EBITDA was slightly below, and it was slightly below because it was also aided by improvement in the EBITDA margins. Now, the net profit, however, came in above estimates, and that was mainly on account of contribution that came in from other income as well as the JV profit contribution from DCCDL. Now let's also talk about the kind of performance that came in from the residential segment. New sales booking of almost 2,230 odd crores was witnessed during the quarter, an uptick of almost 9% on a year-on-year basis. In fact, a highlight for this quarter, especially for the residential segment, was that the company managed to achieve net cash positive status during the quarter, and in fact they also guided that they will be launching constructing nearly 11 million square feet of projects with a GDV potential of almost 19,300 odd crores. Their DDCL rental portfolio also saw an improvement in occupancy as well. So all in all, it does look like a steady quarter for DLF, and that is the reason you should keep an eye out on this counter.
Okay, let's keep an eye out on DLF. Let's move on and talk about Motilal Oswal. Then Forum, from last 6 months, 600 levels to today almost above the 1000 level. Are you still expecting an upside, or should one start booking profits?
Yes, I am looking for some upside here. Well, Motilal Oswal is in fact turning out to be an outperformer for the day also. First, if I have to talk about the overall trend, it's clearly up. Now, consistently it's forming higher tops and higher bottoms. Now, the recent decline last week, what we saw was closer to around 13%, but it was nothing, just a retracement closer to around a 50-day moving average, and that has turned out to be a very good support level. This price move is now attempting to move up higher. Since it's already taken off its recent previous high, it triggers good buying opportunities. In fact, in the last few minutes, it's been forming days high as well. So, in fact, one should be looking at it from a momentum perspective. That momentum can continue in the stock. And thus, one can look at buying the stock at current levels also. And if it retraces, one can even look at adding in. And one can look for a higher target of closer to around 1,130. And stop loss can be kept at around 987 levels.
Okay, 1,130 is the level that one could keep an eye out on for Motilal Oswal as well. Let's move on, talk about Rainbow Children. Ashesha, this one is in focus for what reason?
Well, this one is also in focus in the back of its results. The company has reported strong growth on a year-on-year and on a sequential basis, but the street clearly is not excited with the kind of numbers the company has reported, sitting with a cut of over 4% as we speak. Consolidated revenues came in at 333 crores, up 6% on a year-on-year basis. Margins have also expanded a tad bit. They've come in at 35.3%, up 30 basis points on a year-on-year basis. And PAT has also seen an uptick of 3% on a year-on-year basis. Perhaps the numbers did not live up to analysts and street expectations, and hence the stock is declining in trade today.
Okay, let's move on and talk about the next stock on the technicals and Godrej Industries Forum. What are you picking up here?
Well, at the beginning of this month, there was a steep up move where the stock moved closer to around 20% from the lows of 600 to closer to 733 levels. And thereafter, after forming a top, the stock has continuously been in a decline and have moved back to the levels where it was, that is closer to a lows of around 600 to 602. Currently, the stock is seeing a bit of a rebound, which looks good to buy from a risk-reward perspective. And the entire price decline was backed by very low volumes, where the current price move has been accompanied by an increase in volume, which also supports the bullishness. Thus, around 600 to around 610 levels are good levels to buy, and look for a higher target of closer to 690, and stop loss should be close to 590.
Okay, Forum, that is Godrej Industries, keeping an eye out on that one as well. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.